Hey everyone! Welcome back to Money Tailors, where we break down the latest in finance and tech to help you stay ahead of the game. Today, we're diving into a topic that's changing fast: digital wallets and the future of payments. By 2025, digital wallets are expected to be used more than ever, with cash and traditional card use continuing to decline. In this video, we'll cover how digital wallets work, the pros and cons, and what you can expect in terms of new developments over the next few years. We'll also look at the important issue of security and privacy, which is top of mind for everyone using digital wallets and mobile payment systems. Let's get started. How digital wallets work. First, let's talk about how digital wallets work. A digital wallet, also known as an e-wallet, is essentially a virtual version of your traditional wallet. It stores your payment information, like credit or debit card details, in an app on your smartphone, smartwatch, or other connected device. When you make a payment, the digital wallet uses encryption to transfer your information to the retailer or vendor securely. The transaction is often completed using near-field communication (NFC) technology, which allows your device to communicate with a point-of-sale terminal when held nearby. With digital wallets, payments are quick and seamless. Just tap or scan, and you're done. The most common digital wallets today include Apple Pay, Google Wallet, Samsung Pay, and PayPal, but many new players are entering the market with innovative features. Now let's dive into the benefits of digital wallets, which are driving their rapid growth and adoption. First, convenience is a huge advantage. With a digital wallet, you no longer need to carry multiple physical cards or even cash. Everything is on your phone, and payments can be made in seconds, which is particularly helpful in busy, on-the-go situations. Another big advantage is security. Digital wallets use encryption, tokenization, and often biometrics, like fingerprint or face recognition, to protect your payment data. When you use a digital wallet, your card information isn't shared directly with the merchant. Instead, a unique transaction code, or token, is used. This added layer of security makes digital wallets more secure than carrying physical cards that could be lost or stolen. Digital wallets also offer contactless payments, which became especially popular during the COVID-19 pandemic as people looked for ways to avoid physical contact. This feature allows you to make payments without touching cash, card readers, or other surfaces, promoting both hygiene and convenience. In addition, many digital wallets allow you to manage multiple aspects of your finances in one place, like tracking your spending, managing loyalty cards, or even integrating with digital IDs and boarding passes. This centralization gives you more control over your spending and a better overview of your finances. Drawbacks of digital wallets. Of course, there are also some drawbacks to digital wallets, and it's important to consider these as well. One major drawback is dependence on technology. If your phone battery dies, your digital wallet is essentially useless, and you won't be able to access your money without a backup payment method. Another potential issue is compatibility. While digital wallets are becoming more common, not every retailer or vendor accepts them. In smaller towns, rural areas, or with independent merchants, you may still need to rely on cash or traditional card payments. Privacy concerns are also a significant drawback for some users. Using digital wallets means that companies have access to your spending data, which can raise privacy issues. Although most companies state they don't sell user data, data collection practices remain a concern for those who value their privacy highly. There's also the risk of cybersecurity threats. While digital wallets use advanced encryption, they are still connected to the internet, which makes them vulnerable to hacking or data breaches. Although these incidents are rare, the risk does exist, and security protocols must be constantly updated to address potential threats. Security and privacy are at the core of digital wallet technology, and there have been significant advancements in these areas. Digital wallets use tokenization, which replaces your card details with a unique token during transactions. This way, your actual card information is never exposed, reducing the risk of data theft. Most digital wallets also require multi-factor authentication, like biometrics, fingerprint or facial recognition, passwords, or PIN codes, to verify that it's you making the transaction. Some wallets now offer location-based fraud detection, which monitors where your device is being used in relation to your known location patterns and flags suspicious activity. Digital wallets are also beginning to implement AI-powered fraud detection systems that monitor and analyze transaction patterns to detect unusual activity more accurately. While security is strong, privacy remains a concern. Many digital wallet providers collect data on user transactions, which some people find unsettling. Companies argue that this data is used to improve services or provide targeted offers, but it's something to be mindful of, especially if privacy is a priority. So what's the future of digital wallets as we look toward 2025 and beyond? One trend we're likely to see is greater integration with blockchain technology and digital currencies. Blockchain technology allows for secure, transparent transactions without relying on a central authority, and digital wallets are set to benefit significantly from these features. Many digital wallets are already starting to support cryptocurrencies like Bitcoin, Ethereum, and stablecoins, which are digital currencies tied to the value of traditional assets like the US dollar. As more people become comfortable with cryptocurrencies, wallets are likely to expand support for a broader range of digital assets, including tokens from decentralized finance, DeFi, and non-fungible tokens, NFTs. This means digital wallets won't just hold traditional currency but also become multi-asset management tools that allow users to hold, trade, and manage both fiat and digital assets in one place. Such integration can make it easier for users to transition between traditional finance and the digital economy, facilitating payments, investments, and even borrowing within the same platform. Some digital wallets are likely to start integrating central bank digital currencies, CBDCs, which are digital versions of government-issued currency. CBDCs have been discussed by central banks worldwide, and some are in testing phases, like China's digital yuan and pilot programs in Europe and the US. If CBDCs become mainstream, digital wallets could offer a blend of traditional and digital currency services, allowing users to hold both their regular and digital currency from their government directly within their wallet. Another big trend is the expansion of biometric security features. Currently, fingerprint and face recognition are common security features, but as technology advances, we could see more sophisticated biometrics being implemented in digital wallets. Voice recognition could allow users to authorize transactions by simply speaking, while iris scanning could add an additional layer of protection by verifying identity through the unique patterns in a person's eye. These advanced biometric features offer greater protection against fraud and identity theft, which are ongoing concerns for digital wallet users. These features also help reduce reliance on passwords, which can be vulnerable to hacking, and make it easier for users to verify their identities in real time. There is also growing interest in super apps that combine multiple functions within a single app, extending digital wallets beyond just payments. A super app might integrate banking services, digital identification, shopping, and travel bookings all in one platform, creating a more convenient, one-stop solution for managing all digital interactions. For instance, you could use the same app to pay for groceries, store loyalty cards, access flight tickets, book hotels, and even apply for loans. This all-in-one approach simplifies users' financial lives and creates a seamless experience for managing everything digitally, reducing the need to switch between multiple apps. We're already seeing examples of super apps in Asia, with platforms like WeChat and Alipay allowing users to complete transactions, book taxis, order food, and even access healthcare services. As Western markets catch up, we could see popular digital wallets evolve to integrate more features and aim to become comprehensive super apps. As wearable technology advances, we're also likely to see more smartwatch and IoT integration with digital wallets, making digital payments even more accessible. Currently, users can make payments through smartwatches and phones, but the potential goes further with IoT devices like fitness trackers, smart rings, or even smart home devices. This means users could potentially make payments directly from a fitness band while on a run or order groceries using voice commands through a smart home assistant. The broader range of connected devices makes it easier for people to make payments and manage finances anywhere and anytime, creating a frictionless experience that enhances convenience. Augmented reality, AR, and virtual reality, VR, are also emerging as potential players in the future of digital wallets, especially as the metaverse gains popularity. In virtual spaces, digital wallets could enable seamless transactions for digital goods, virtual real estate, and services, making it easy for users to buy and sell assets directly within an immersive environment. Imagine attending a virtual concert where you can buy merchandise in real time or paying for a digital service from within a VR meeting. AR and VR payments could further bridge the gap between physical and digital interactions, allowing users to engage with products in immersive environments and pay for them instantly through their digital wallet. The future of digital wallets also includes artificial intelligence, AI, integration to provide more personalized financial services. AI could analyze spending patterns, recommend budgeting tools, provide savings tips, or offer tailored investment advice directly through your digital wallet. For example, if you tend to overspend on dining out, the AI could alert you and suggest setting a spending limit or redirecting funds toward savings. AI could also enhance security by using machine learning algorithms to detect suspicious activity based on your usual spending habits, adding an extra layer of fraud prevention. AI-driven insights within digital wallets could help users make better financial decisions and customize their financial experience based on individual needs and habits. As all of these innovations evolve, cross-border payment capabilities are likely to improve, making international transactions faster and more affordable. Currently, sending money internationally can be slow and costly due to currency conversion fees and intermediary banks. However, as digital wallets adopt blockchain and work with financial networks that focus on cross-border payments, the process could become more efficient. This would allow users to send funds globally in real time, at lower costs, benefiting both individuals and businesses that operate internationally. Increased interoperability is another trend we may see, with digital wallets integrating more seamlessly with different payment systems, financial institutions, and even cryptocurrencies. Interoperability would allow users to link multiple accounts or assets and manage them in one place, even if they're from different providers. For example, someone could manage their traditional bank account, PayPal, and a crypto wallet all within one app, making it easier to move funds across different platforms. As these digital wallet technologies evolve, it's likely that more companies and retailers will adopt digital wallet-compatible payment systems, making digital wallets accessible in more places worldwide. Digital wallets in 2025 will not only enhance convenience but also create an interconnected, secure, and user-friendly financial ecosystem where people can manage all aspects of their finances. With the combination of blockchain, AI, biometric security, and expanding device compatibility, the future of digital wallets looks poised to make daily financial transactions faster, safer, and more accessible than ever. Government regulations and digital wallets. An area we can't ignore when discussing the future of digital wallets is the impact of government regulations. With the rapid adoption of digital wallets and digital currencies, many governments are creating regulations to protect consumers and ensure security. In some countries, we're already seeing the introduction of central bank digital currencies, CBDCs, which are digital versions of national currencies. These could potentially be integrated into digital wallets, allowing users to hold and spend digital currency issued by their government directly in their e-wallets. However, with greater regulation, there may be increased compliance requirements for wallet providers, which could affect data privacy. Governments may require digital wallet providers to verify users' identities more strictly or report certain transactions, which could raise new privacy concerns. As these regulations evolve, they'll likely influence how digital wallets operate, especially in areas like security standards, data protection, and transaction monitoring. To wrap up, the future of digital wallets is full of exciting possibilities and challenges. They're likely to become even more integrated into our daily lives, offering features that go beyond simple payments. With more options, stronger security, and a broader range of functionalities, digital wallets in 2025 could make managing finances simpler and more streamlined than ever. But with this growth comes the need for greater awareness of security, privacy, and compatibility issues, especially as regulations change. If you're already using a digital wallet or considering one, it's an exciting time to explore how this technology can make your financial life more convenient and secure. Thanks for watching, and don't forget to like this video, subscribe to Money Tailors, and hit the bell for updates on the latest in digital finance and tech. Let me know in the comments, what's the feature you're most excited about for the future of digital wallets?